Good morning, folks. Good morning. So, about our class yesterday, topic liquidity. So, we have two kinds of liquidity in the market. We have buy side liquidity resting above, then sell side liquidity resting below price. So, depending on the direction of the market, so where is going to take a liquidity. So, liquidity refers to how active a market is. While trading market the price seek for liquidity above or below. So reasons why price go up or down is going up to seek for BDRs for up above price or below price, to seek for liquidity be above or below, or run to an inefficiency we have in the marketplace. We have fair value gap, inversion, volume imbalance, new week opening gap, new day opening gap, opening range gap. All those are void. When all these things occur, we normally see a space, a gap between two candles. We see a gap. So that's an inefficiency, a hole. So let's use this diagram to show you how to identify a buy side liquidity where it's resting and a sell side liquidity where it's resting. So we have see this as a candle. Then here is the low, a bullish candle. There is a bullish candle. Yeah, we have low here. Then we have high. This low is our sell side liquidity, while the high is our buy side liquidity. So if a liquidity wants to be swept, to be purged, we see something like this, price taking it off, like here, this movement here. Then we have purged, we have taken the buy side liquidity between this sell side and the buy side liquidity. So we have purged the buy side liquidity, that's price is trading up. So after taking the buy side liquidity, if any inefficiency resting above fair value gap, then price will deliver into it to fill it up before it reverse or redeliver to take the sell side below. Here is also a sell side liquidity. Here turns to a sell side liquidity. Up here is a buy side liquidity. Buy side liquidity. Low is sell side liquidity. Let's quickly use a chart candlestick to show you. Okay, using this range, for instance, from this price movement, this candle here, bullish candle, last close candle, order block to down here. Here is our sell side liquidity, while here is our buy side liquidity above. After creating a low here, we can see that price started trading long. Where is it going to? To the high that created the low. That's the buy side liquidity resting above the liquidity. You can see that we had breakout, a breakout structure. We have a high, this candle, bullish candle high, a bearish single candle inside, low. Then we have a higher high. Then we see a candle that took it off, then break below, a breakup structure, then created a fair value gap. Here is an inefficiency. That's where the price ran into to fill it up, so to continue its direction. It's a starting point. Depending on the time of the day it happened, it ran into the inefficiency. Okay, that shows how active a market is. Taking the buy side liquidity, you can see this candle here took it off. We took the buy side liquidity off here with this candle. Already we had an inefficiency, a fair value gap here, this candle here. You see how price deliver into it, the body at the 50% of it, then fill it up. before trading long to take this buy side liquidity, because we have a target price coming to take the liquidity resting above. Because we already have a target, you can see after hitting our target, which is taking the liquidity resting above, price drop, then we took the low here is high, this is low, the bearish candle is low, the bullish candle here is a high with the body, then here low, then we had a higher high, a bullish candle, then a lower low to take this low here, a break of structure, then we created a fair value gap and inefficiency, sell side imbalance, buy side inefficiency. So price went low, as low to take the sell side liquidity, the low here, you can see it here. So after taking the low, we ran into the inefficiency to fill it up, to fill the gap, this space here. Price that fill it up, it's no more a void. After filling it up, it's no more a void. So we traded low, coming to take the low, sell side liquidity resting here, because we are bullish. We have a target. Where is price going? Here, the high here. That's the target. That's where price is heading to. Because that's bullish, the bullish trend. We are going high. So price will come and take the low that push, because here is already a previous high. So it's a breaker. Price will come and take the low, the sell side resting below here to continue. You can see we traded high. The other thing, we can see where price went to this high here. You want to take a liquidity. Here is a liquidity. And see, you took it off. You took it off. Then after taking the liquidity, the buy side liquidity, you can see price drop. We have high. We have high, low, higher high. Then a break of structure. Take this low. Here turns to a breaker. This candle is our breaker. You can see it's our breaker. So where the price traded into, price came and filled this new week opening gap. There is a gap here, a void. That's at the body, where the body close. That's where you start. Between this candle where the body close and this candle where the body open, there is a gap there. That's volume imbalance. That's where price deliver into. Then we continue going long, going long, going long, then reaching forth at the buy side liquidity here, which is our target, our daily buy side liquidity. That's where price reach out for. So as we are trading today, being Tuesday, you can see we are reach out for there. We're expecting price going into the consequent encroachment of this fair value gap. This is a consequent encroachment, the half of it of the inefficiency. That's where price is going. So that's what price go up for, to seek for inefficiency or a liquidity above price or below price. Okay. So if any question, you let me know. Make sure you practice. Go to your chart, you will see it on British pounds daily. You will see it. So you practice and practice and practice. Okay. Yeah, we should all the best. Be safe.